So you might be the beneficiary of a trust and you received an accounting in the mail and you thought to yourself, what is this? And how do I read this thing? Or maybe you're a trustee and you're wondering, do I need to prepare an accounting and how would I do that? And by the way, what is an accounting anyways? In this video, we'll answer all of those questions and we'll walk you through a sample accounting so you'll know what to look for. So let's dive in. But before we start, I want to mention that we have a monthly free newsletter that I like to send out that has a lot of tips on trust administration. So I encourage you to sign up for that. You would click below. Okay, so first of all, what is an accounting? Basically, I think of an accounting as a trail between what did the settlor have at the time of their death to what was distributed at the end of the trust administration. During that time period, we're looking at what came into the trust and what went out of the trust and what happened to assets inside of the trust during that time. This is so beneficiaries can basically track those assets and make sure that the trustee hasn't pilfered anything or nothing untoward has been done, and they're entitled to all of the money that they get from that trust. So who is entitled to an accounting? Well, anyone who is a current beneficiary of the trust or who is going to receive something from the trust later. You could be an income beneficiary, you're getting an income stream from the trust, or you'll be receiving an inheritance later from the trust. Now, note that this does not include what we call remainder beneficiaries. That means that somebody else has to die in order for you to receive an inheritance. So let's say mom dies and leaves stuff to the two kids, and if one of the kids dies, his portion goes to his two kids. The two kids are the beneficiaries and they're entitled to an account. But the two kids of that son are remainder beneficiaries. They're not entitled to anything unless that son dies before mom. So the remainder beneficiaries, the grandkids, are not entitled to an accounting. So how often are you entitled to an accounting? Well, the California Probate Code lays this out in Probate Code section 16062. So the Probate Code is really California's set of rules that govern what happens to a trust and what happens during a probate administration. And that code says that you get an accounting just about every year, or if the trustee has changed, or if the trust is wrapping up. Now, as I'm going to show you, doing an accounting is a pain, it's a lot of work. So sometimes beneficiaries will waive an accounting. That means they can say, oh, no thanks, we really don't need that accounting. And an accounting isn't required when all the beneficiaries waive an accounting. And this can save a lot of time and money, especially when you trust that the trustee is doing the right thing. And in that case, a beneficiary can ask for other information if they'd like. If they want to get bank statements from an asset that was held in the trust, for example, you can provide that instead of an accounting if a beneficiary is okay with that.
Hello, did you know that my mom helps people all the way through the state of California from top to bottom? Go give her a call.
All right, so what does an accounting have to contain? So we look at Probate Code section 16063 for this. So it says that an accounting needs to have a statement of receipts and disbursements of principal and income that happened that last year. So what does that mean? Well, receipts are things that went into the trust and disbursements are things that went out of the trust. So you have to have a list of each of those things. Then you need a statement of the assets and the liabilities in the trust. So what's held in the trust and what does the trust owe to somebody else? Any creditors that are there. And you need to say what the trustee was compensated for. You also have to list out the agents hired by the trustee, how are they related to the trustee, and what were they compensated. Then you need a statement that the person receiving the accounting is entitled to bring a petition to the court to obtain a court review of that accounting. But also that any claim for the trustee's breach of duties, anything that the trustee does wrong, really you have a 3-year window to bring a claim, and otherwise the statute of limitations is run and you can't bring a claim. So receiving an accounting really starts the statute of limitations running. So let's look at an example. Okay, so here's a case I worked on, and I've redacted some of the information, but you can see enough of it. This was actually a probate, but a trust administration accounting looks very similar. So you'll see here's the summary. We have property at the beginning of the accounting on August of 2017. That's when the deceased person died. And then also property at the end of the accounting. That's when everything was distributed out towards the end. And that was in May of 2021. Now you'll notice that's a 3-year period. Sometimes trust administrations and/or probates can take a long time for various reasons. And that makes the accounting even more of a pain. So I thought we'd have a lot of good examples to look at in here. Then we also have receipts. We have any capital gains that were accrued after you sell a property. We have disbursements, what went out. There's also losses and other distributions. Those didn't apply, so they're not in here. And then a few other schedules. Okay, so first, what was there at the beginning of the accounting? People want to know. Well, there was a savings account, an E-Trade account, an IRA account, some securities, and a house. That's what the deceased person owned. And then we have what property came into the trust after the deceased person died. And that happens to be a security deposit because that house was being rented out. So that was something in addition that came into the trust after the death of the decedent. All right, now this one's pretty long. You'll see these are receipts. So this is stuff that came in. And remember that savings account, it was generating interest, and you have to report each of those items of interest. I mean, this is really a pain, right? 47 cents of interest for the month of August, 57 cents for the month of September. You get the idea. We've also listed the rental income. As I mentioned, that property was being rented out, and this is how much rental income they got every month. Then we have some of the securities were sold, and there was a gain that was accrued, and income taxes that will need to be paid, and so that was reported on this schedule. Okay, next we have disbursements. These are payments that the trust needs to make. So we have payments for property taxes for that property. We have a lot of mortgage payments here every month. The mortgage needed to be paid. Then we have a lot of work that several people did to prepare that house to be sold. And all of that work is listed here as well. Okay, some other disbursements. So these are really like closing costs and other things that happened during the sale of the house. The security deposit that was paid back to the tenant, and some income taxes that needed to be paid. At the end of the account, you'll see the only thing left was cash. Everything else was sold, and now this cash is ready to be distributed out. And how did that happen? Because there were like 6 different accounts open at the beginning of the accounting. Well, this is what happened. There was an account that was opened, a few accounts that were closed, some securities that were sold. So it kind of details the timing of each of those accounts being opened or closed. Okay, so here are liabilities. These were basically payments that were made. You'll see there's a payment to us, and then also a payment to the administrator of the probate. That would really be trustee fees if it's a trust administration. There were some other costs that needed to be paid as well. So finally, we have the final distributions. You'll see half of the assets went to the surviving spouse, a quarter went to the dad of the decedent, and a quarter went to the mom. And that's what was paid out. Ta-da! So there's your schedule of accounting. Now, at Cookman Law, we don't prepare fiduciary accountings. We typically send those to accountants or paralegals who specialize in that. But we do help trustees navigate the trust administration process. If you have a family member in California who recently died and you need help with the trust administration process, please reach out to our office and we'd be happy to help. And if you'd like to learn more about deadlines for trust administration, please watch our video on trustee deadlines, and we'll see you over there.
Did you know that my mom has a monthly newsletter? Subscribe by clicking below.